And we are live. This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is episode 295 of Trade with Travis. Hopefully, everybody's doing very well. As we go through and take a look at the pairs, I'm not going to end up being on the screen today, so just letting everybody know, just kind of get everybody a head start when it comes down to that information. Um, Good to be able to speak to everybody. Today is today's Wednesday. So we're going to see how the market's going to end up reacting today compared to how it ended up reacting yesterday. And we're going to go from there. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from the education, you can be able to make your own informed decision. And understand that trading involves risk, and involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that, as we go through and take a look at everything. And for the people that are watching us on YouTube, thanks for being able to watch. For the people that's on TradingView, thanks for being able to watch as well. I'm going to go ahead and go through this very quickly. And then after that, we'll talk about what's going on, if there's any tradable opportunities. Yesterday, we ended up saying that there wasn't going to be a lot of news that we had to pay attention to. Swiss franc and that happened at GDP, which is actually pretty good. We ended up seeing that retail trade and retail sales ended up coming out from the Japanese yen. Um, and earlier this morning, we ended up having non-manufacturing PMIs from China. Um, and a little bit later on today, we're going to end up having a GDP from the Canadian dollar. Um, Obviously, this is the last trading day of the month. And because it is the last trading day of the month, I don't expect that we're going to end up seeing a lot of fireworks when it comes down to movement. We typically see that in the first week of the month. So I'm going to take a look at that and we'll kind of get into how everything goes from there. Let's take a look at the United States dollar index first. We'll take a look at oil. We'll take a look at gold. Um, See how everything kind of plays off with that and kind of go from there. So, being very quick, we end up talking about how this market showed consolidation. It kind of end up bumping its head right around 12,715, and since then, over the course of the last 2 weeks, the market has popped up to the resistance, which was right around 12,000 or right around 13,000 for that overall movement. We had 2 days or 3 days indecision. Currently, right now, it looks like the bulls are starting to take a little bit of control this morning as this market is kind of making its movement overall. And take a look at it from a 2 hour perspective. We end up having a solid movement to the upside. We are starting to see a little bit of resistance from these candlesticks in the 2 hour. You can see it right here. You can see it right here. And currently, right now, we end up pushing ourselves all the way up to that position, and the sellers end up basically turning into resistance again. So we're looking at 12,990 as basically that resistance point that has to be broken. Any buys will have to be any buys that I end up taking a trade on will be above that area. Um, and if that does happen, then after that, we have an opportunity of being able to get in to be able to make a move. My thing is right now, I just want to make sure that we end up making a solid position or a solid move to the inside or to the upside once the market ends up making that push. I don't want to sit up there and jump in early just because we have the opportunity to, because we could see that that could backfire. So this is our resistance. We have a little bit of a support right here. So if the market does fall down, I don't think it's going to fall far. It may end up falling down to 12,950. And then after that, keep on moving if the market is considered to be bullish. Now, if the market ends up breaking out bearish, then we'll see that it will break below 12,950 and go back inside of this consolidation. And then after that, we won't have any other move to be able to take. But currently, right now, because the market is kind of accumulating and trying to figure out what it's going to do from a consolidation standpoint, my order will not be in until it breaks above 12,990. Type in a Y or yes if that makes sense for the people that are watching. But United States dollar pairs, I think that at least from the beginning of the morning, we're probably going to see a little bit of consolidation until there's a breakout of overall movement. Now, if the United States dollar index is going up, if the United States dollar index is going up, then the Dow Jones and Nas are probably going to end up falling to the downside. So please keep that in mind as we take a look at all of these pairs. U.S. oil, as we take a look at U.S. oil ended up taking a major drop off yesterday. We had this consolidation triangle that we ended up talking about, this wedge. It broke out to the upside, retested back inside from here. So it reset that triangle one more time before actually being able to fall. From there, the market ended up making this push, broke to the downside, retested to the downside, and currently right now the market is making its way to the downside overall. Now, Taking a look at this from just a overall trade perspective, from a long-term perspective, as we've been looking at everything, there has been resistance at 82.50 and support at 62.70. 62.70 is still a position where I think that the where people are going to be aiming for to end up trading this actual position. Once it breaks below that, then after that, it will break basically. This will be the second time that the market has broken that point or has hit that point since early March of uh, of this year. As we go through and take a look at that movement, we'll see how it kind of plays off. If you're a scalper, then um, you could find some reason for being able to sell. But me personally, you didn't jump into it earlier yesterday, then there's really no reason to be able to jump into this now. There goes your counter trend line break. That's when you should have looked at being able to get in. Currently, right now, we're not there yet. Um, but we have GDP today, so that may end up affecting what's happening. I think the market may just be falling just because of GDP, and then after that, we'll see how it ends up playing out because obviously the Canadian dollar has a correlation to that. Okay, taking a look at gold. Jeez. Um, if I can hear that, I know that y'all can. Um, okay. Um, Gold, what ended up happening? We've seen that the market end up breaking support at 1950 yesterday, fell all the way down to 50, to this low of 1931, which um, in fact basically succeeded and hit this the extension from a short-term downside position. Um, the take profit was 12,000. I mean, it was 15. I mean, I'm sorry, 19,000. 29. The lowest point was 31. So I would consider that to be fulfilled and actually be hit to the downside. That means that the United States dollar ended up having a little bit of strength until the market actually ended up breaking to the downside and fulfilling that spot. We ended up talking about yesterday being able to make a sale if the market broke below that position. I'm sorry, on Friday, making a sale if the market broke below that position. I did not personally take this sale. For the people that did, congratulations. I'm sorry, let me rephrase that. I was looking for buys. So I was waiting for the market to be able to pop up to the upside and then be able to go from there. From a downside perspective, it completed the 2 hour D extension first before being able to pop up. Um, it has broken to the upside, but I'm not interested in being able to buy, at least not yet. The reason why I'm not interested in being able to buy right now is that obviously we're looking at the dollar being in consolidation at the resistance point. If it remains to be falling down, then after that, I look at being able to buy on this pair and be able to jump from there. So gold is pretty simple. Not interested in being able to do anything off of that right now. Bitcoin, as we end up taking a look at that chart, or at least that was the first chart that showed up. Um, let's see where we're at on this one. Bitcoin ended up breaking out of this consolidation, basically ended up going back inside because of that. Now we can be able to say that this is your new resistance between this point and this point over here. Pull that down just a little bit. There goes your resistance point right there. Uh, Currently, right now, we're in the middle of that position, so I'm not going to be interested in being able to take a trade. So Bitcoin is pretty simple, not doing anything off of that. Let's take a look at US 30. So last time we talked about US 30, we talked about how it ended up breaking to the downside. You had an opportunity to be able to get 500 points from the trade that we ended up looking at last Friday, in which we did because it fell down to support. Currently, right now, we're still back to basically in the middle of the Ichimoku cloud and in the middle of this consolidation that we have been looking at for a very long time since the beginning of this year. The resistance was at 34,400 and support was at 32,500. Currently, right now, the market ended up pushing all the way down to the support, and then after that, kind of pushing back up, but it's still showing downward momentum. So I think that we may end up testing the downside one more time. The only way that we could truly be able to know that is by being able to take a look at what's happening from a smaller time frame. Here's your daily, and being able to add in a volume profile to be able to take a look at it. From a volume profile standpoint, we ended up talking about two particular trades that we wanted to be able to do if the market did sell off. The trade that I was interested in, the trade that I ended up getting into, was when the market ended up breaking below the actual support. We talked about this yesterday. We ended up saying we wanted two things to be able to happen. One, this market was showing resistance right up here at 32,200. We said if the market ended up falling, the market was going to fall right around 33,100. And then after that, try to retest these overall lows that we ended up taking profit on in this last position. I am going to end up taking profit on this position compared to where I was, because we're talking about a 300 point move. Currently, right now, the market fell down 250 points, and if we look at it this morning, where it is right now is at 120. So I'm going to go ahead and take profit off of this. I wish I had my trail stop going on last night. Could have made a little bit more points off of this one. But even with that being said, it fell down to what a point of control was, fell down into this little area. And you see that little gap right in here? It literally fell and touched right here at the top of that gap, or right here in that small little point of that gap right there. That's the reason why volume profile is so important, and being able to know how to be able to read it, because it'll let you know where the market's going to end up falling down to, and you have a good chance of being able to get out. The last time we did it was right here and getting out right at that point. The second time, essentially what happened is it got very close, but it didn't finish up. That means that we're seeing that this market probably may end up having more signs of upside moving in the future, compared to um, staying more towards the downside. Or at least it might end up showing, or it may end up starting a wedge at some point in time. But for right now, the market, I think, is not going to give us the opportunities that we would love to be able to see going into the morning, at least for right now. Taking a look at Nas, which would be the last pair. Nas ended up having a breakout to the upside. I said that I wasn't going to make any type of move until we ended up figuring out what was going to end up happening. They ended up completing a daily D extension last on Friday when they ended up making that big pop to the upside. We ended up saying that we're going to get out at 13,940. The market ended up popping up another 400 points from there. Ended up completing a very high push when it came down to that. Broke even past these new highs, or these highs that we ended up taking a look at from this previous consolidation. Um, the next portion where this market is going to end up eventually going, as we end up taking a look at every little individual move, will probably end up being up to the 15,150 area. The question is when is that going to end up happening? That even goes back before we actually end up starting to look at the vortex method for being able to trade this position. Um, Great job. You should look at gold too. We just took a look at gold. We took a look at gold earlier. We'll talk about it. I refresh it, but we'll come back to that. Um, I think 15,150 is the next position. The thing is, it just got to build out a little bit of consolidation. Small wedges and stuff like that end up happening. That ended up happening 2 days ago. I don't think are going to end up propelling this move to where it can be able to truly go where it's going to go. Now, keep in mind, if the United States dollar index keeps on falling down, then Nas is going to keep on pushing up. Um, and I think that we may end up seeing a move like that happen in the future, but I don't think it's going to be on the last day of the month. So um, I'm probably just going to sit clear, take my profits for the month, and then keep on moving. Let's go and take a look at gold one more time, just to be able to review it. And then after that, we'll get out of here when it comes down to movement. Gold, like I ended up saying before, I was looking at being able to buy. The market showed consolidation a few days ago, fell down to the downside, completed the 2 hour D extension, or at least completed 98% of that 2 hour D extension. From there, when the market ended up popping up to the upside, it retested back inside of this natural support. As long as it stays at this point, we keep on going back to what I ended up harping before. The United States dollar index gets stronger, then what we'll see is, gets weaker. We'll see that gold will start to pop up to the upside. We don't have no indication that it's ready to go yet, so I'm not interested in being able to jump in yet. That's my idea on gold. Long term perspective, weekly is saying that we're in a no trade zone, and the market is basically in the middle of this consolidation. Daily is basically saying the same thing, but daily is more in the buy zone. Um, to me, this is one that if you and you had a lot of, let's say you only had a little bit of money and you only be able to split it into a few different positions, this wouldn't be the position that I would look for being able to jump into, at least until there's some type of move. Okay, cool. So that is it for the pairs that we typically end up going through. Um, because I don't see that many people online live this morning. What I'm going to end up doing is I'm going to go ahead and cut it short. I got to get ready for schooling anyway. If you like what I end up doing, please make sure that you end up clicking on that boost button for TradingView, and obviously the follow button if I end up providing value. Same thing for YouTube. Like always, make sure that you end up planning your trade your plan. We'll see each and every one of y'all tomorrow as we go through and take a look at some more trading opportunities. Take it easy.